There is always another bubble. When one pops, the next one starts. This is a constant factor because of central bank policies. They have created this mess and will continue to do so for the foreseeable future. Today we see corporate debt skyrocketing along with all other forms of debt. This, combined with shrinking liquidity, will be completely disastrous for the global economy. You came here for the truth, so let me unveil that for you. Today we're going to talk about liquidity, we're going to talk about debt, we're going to talk about the United States in particular. I'm also going to mention China, and I have an absolutely jam-packed episode for you today. Let's begin by taking a look at this chart. Another Minsky moment on the horizon. This chart is comparing the black line, which is the net worth of US households, and the green line, which is the nominal GDP. And you see the bubbles that have existed before, whether it's the dot-com bubble circled here, whether it's the subprime bubble here, and potentially today is this, the corporate debt bubble. I'm going to show you what corporate debt is currently at in the United States and China. I want to compare the two here because we can see that these two, although the GDP is fake, we know that, it's proven. However, let's take it for what it is. There's a disparity that grows throughout this period of time. And even though you have the potential for the GDP to slow down or to shrink during periods of recessions, we can see that the debt that exists throughout this period of time will shrink even more so. And that is a very, very big problem because this system runs off of debt. It's not in parallel. We could see the disparity that grows in between the two. And then they will come closer together throughout periods of adversity. Okay, you could see that the nominal GDP and the net worth of US households, I like to see that as debt, but these two together coming closer and closer. Now, if that is the case, we are in for a very, very wild ride in the near future at some point. The higher up this goes, the higher the net worth of US households goes, that means it's going to have to fall further and further because we seem to be getting very, very close to this line here in the US nominal GDP statistic. I'm going to compare this now by looking at all the corporate debt that exists today. Starting with this out of the Fred website, amount outstanding of total debt securities in non-financial corporate sector, all maturities, residence of issuer in the United States. Okay, let's just talk about it for what it is, and that's corporate debt. And where do you want to start? Do you want to start in 2000? Do you want to start in 2009? Do you want to start in the 1990s? Do you want to start in the 1970s? We can see that it has consistently been rising and rising and rising. The debt that we experience today, it's not coming from one area or another. It is coming from everywhere. Non-financial corporate business debt securities, same situation. Okay, just wanted to show you these two charts and then looking at China as well. The corporate debt here is in a massive bubble. This is just one chart, but I've shown you that before, and a lot of it is in the shadow banking. It's hidden behind the scenes, along with the United States as well. China is not the only one. So I wanted to make sure that I showed you that just to let you know that this is coming from everywhere. Strong relationship between global dollar liquidity and asset prices. And lo and behold, top left corner, you can see the global dollar liquidity declining considerably since the financial crisis. This is a very big issue because liquidity is what is keeping the market alive, not because of what the central bankers did since 2009. It is because they've designed the system this way. Look at it from how it was back since 1913. They've been relying on these central banks, in this particular case, the Federal Reserve, to continuously create a debt-based system that runs off of fraud. It's running off of fumes today, and that is going to be a very big problem. Global dollar liquidity versus commodity prices, they're on the decline. Global dollar liquidity versus the US dollar, that we can see in 2018 has been declining as well as the global dollar liquidity versus world equity prices, All of these have been on a decline since the financial crisis. We've got a very big issue to worry about. Global velocity of money is not rising despite accommodative policy. How does that make any sense? We've printed $15 trillion since the financial crisis, yet the velocity of money isn't going anywhere. And why? Because just by printing money doesn't mean it's going to be loaned out into the system. You saw my previous video, Steve Eisman, talking about the Federal Reserve quantitative easing policy was a failure, and yet they doubled down and did it again. They thought that it would be a good idea to print up a whole bunch of money and buy a whole bunch of garbage. It didn't get the economy going, not one little bit, but what it did do is enrich the bankers, and that was the whole purpose of it. And still today, they're being hailed in the Atlantic, Ben Bernanke, hero, right on the front cover. Well, anyway, that's the global velocity of money. I think it's important, and you can see it here on the Fred website. Just, if you want to search for any of these, by the way, I know I'm accused all the time of somehow hiding information, even though every single thing I've ever produced on here is in the sources. But anyway, in the description of the video, you can just type in velocity of M2 and type in the word after that, Fred, F-R-E-D, and you will get the charts to come up here directly from the St. Louis Federal Reserve website. And look at what the velocity of money has done. It slowed down after the dot-com boom. It slowed down again after the financial crisis. And today we should be seeing incredible levels of velocity because there's so much money. And I've been hearing that the economy is doing so well. But what's going on? Is it doing well? Because the velocity of money is not doing well, that's for sure. We should be seeing this increase quite a bit, and we see that it does come up sometimes, but then it goes right back down. So we're going to track that and trace it over the next few months, of course. This right here is just comparing the S&P 500 to the Japanese stock market. Japan, despite the fact that they have been intervening on a considerable level, not just throughout 2018, but they've been doing so for decades, their stock market has been absolutely punished for the last little while. I mean, they own 80% of the ETFs in this country. What a joke. What a complete joke this is. They own now 40%, I believe, of the debt, 40% of the bonds in Japan. And they are in the top 10 biggest shareholders of all of the biggest companies, something like this. Top 10 biggest shareholders. So look at that. That's an example of such success. The Hong Kong Hang Seng market has been also suffering, whether you look at that through this example here. I mean, just showing us Hong Kong, but I can also show you China as well. That has been hurting throughout 2018. But I think it's been ever since the trade issues that has really been doing poorly. Here you can see basically through June, it has really taken a nosedive and decoupled from the S&P 500. Okay. Looking at this, comparing to emerging markets, I mean, just utter disbelief at what has happened. The US dollar has strengthened against all of these emerging market currencies, as well as the stock markets are taking a beating here. Now, central banks bought most of the government debt expansion. Aggregate business balance sheet of large central banks in the trillions of dollars and a percentage of the GDP. They've purchased 40% of this GDP increase. 40% of it. And then you look at this. I mean, what it's showing here is 20 trillion essentially since the year 2000. 20 trillion. What we can see from this period of time is that 15 trillion of that has been printed just since the financial crisis. $15 trillion. And it's not just the Fed. It's the Fed, ECB, the PBOC, the BOJ, the BOE, and the SMB. They're all doing it, okay? Every single central bank. The only problem, is that they're starting to phase out of that policy. And if they continue to do that, we've got a very big problem. Nobody wants to admit it, but that's where we're heading. This is just trying to show us here it's from Visual Capitalist. But looking at this, we have an issue with the way that our financial system is set up. Real money accounts for just a small fraction. So they put gold here, but even let's just take the base money, $28 trillion versus $4 trillion in 2007, a considerable amount there, no doubt. But we go off further. Broad money, non-US dollar debt, securitizations, garbage, shadow banking up to $100 trillion, derivatives, although they put them today at $500 trillion versus, according to this, $1.6 trillion at the end of 2007. Real money, which I don't even think base money accounts for real money. I think it's a lot smaller than that. But anyway, what I look at in this case here is that we have a whole bunch of fraud standing on the shoulders of you and I. Our bank account, if you're lucky, your bank is only a 10-to-1 loan ratio. You give them $1, they can loan out 10. They are saying how strong the system is because some banks previously had a 33-to-1 ratio, and now today it's only 10. We've got a disaster waiting to happen. Which level it's going to be? Is it going to be in the securitizations? Is it going to be in the shadow banking, the derivatives? I couldn't tell you. But when you add all of this up and then you put shrinking liquidity from the central bankers in line with this, we've got a big problem ahead. There is no doubt. If you found the video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel. I do appreciate that very much. And if you want the financial education you were not taught in schools, these two books have it all. You can actually flip through these books. All you gotta do is go to the link in the description. You'll be able to flip through the books for yourself. If you're more interested in the audiobook version, you can get that at themoneygps.com.